Well, let's talk now to someone directly affected by these stress tests. He is Secretary-General of the European Banking Federation and also Secretary-General of the European Association of Cooperative Banks. Guido Ravoet joins us now live from Brussels. What do you think about this idea that they simply weren't tough enough, otherwise they would have failed more banks?
Well, I think it's unfair to say that. The tests were 3 times as harsh as in the US last year. And I think the results are quite comforting. It's normal because the European banks went through huge restructuring plans, recapitalization, cleaning up of their portfolio. So the outcome is quite normal. And I think it should dispel now these unfunded fears of markets.
But what really have they accomplished? I mean, without checking on default, coming in with the capitalisation so much lower than was forecast, have they actually proved their worth?
Well, for the large majority of the tested banks, the outcome was very, very positive. It's only about 7, let's say, not so important financial institutions that went not successfully through the test. But that doesn't mean that they are in trouble. Even these 5 Spanish saving banks, they can operate under normal circumstances. It's only in the very unlikely scenario of a double-dip recession and a 3% economic downturn by the end of 2011, which is really unlikely to happen, that they would have to recapitalize. That's the meaning of this stress test. Not that they have problems now. It's just to give them the warning that they have to recapitalize if they have to meet extreme financial crisis circumstances.
Now, is this just the beginning? There were only 65% of Europe's banks tested. Can you imagine that there will be more stress tests, perhaps more stringent ones in 6 months or a year?
Well, it is becoming routine. It's a second European-wide stress test. And actually, each year, national supervisors are doing this exercise with their domestic banks because it is part of the supervisory review process under Pillar 2 of the existing Basel II framework. So it's nothing new. What was new is that it is based on common assumptions on a European-wide basis, and the European Committee of Banking Supervisors, CEPS, will certainly go on with this. And what is new was that it was published, the results, not only on an aggregate level, but also on a bank-by-bank basis.
What about those results? Because we didn't get all the results we were expecting to get. Should we have had more transparency?
Well, the transparency is complete because the national supervisors will give all the detailed information and results of the stress tests. What CEPS did on Friday was just giving, first of all, aggregate figures and also a summary of its report bank by bank. But investors who really want to have the details of each individual report can consult the websites of the national supervisors. And I guess also some banks will provide this kind of transparency.
Okay, Guido Ravoet, thank you very much for joining us.